In the metals quadrant, March silver futures rallied today for the third consecutive session, with today being the strongest of those three sessions, up just over 6% so far. The high today was 82.95, up 6.85%, and the low today was 77.28 half, only down 0.45%. The strong bounce right off the open, which coincidentally occurred at the 50-day moving average, along with a close near the highs, which is what looks likely, is a mild bullish signal heading into next week. Now, the structural story in silver hasn't changed, likely why prices haven't declined meaningfully. The Silver Institute confirmed this week that the market is headed for a sixth straight annual supply deficit in 2026, with demand continuing to outrun mine production by a wide margin. Global silver output is forecast to come in around 820 million ounces this year, up just 1%, while industrial consumption keeps climbing, led by solar manufacturing, electric vehicle demand, which is admittedly starting to decline. That deficit keeps long-term COMEX futures positioning biased to the upside, even as the market works through the volatility left behind by January's speculative blow-off. A softer than expected inflation reading last week handed silver bulls a reason to stay engaged in long positions. January CPI came in at about 2.4%, below the 2.5% consensus, and it made it the lowest annual print since May of 2025, nudging traders to start thinking about when the next rate cut may arrive. CME FedWatch tool still has 2 rate cuts priced in for all of 2026, with July the earliest realistic target for a first move. For COMEX silver futures, the timeline matters. Elevated real yields limit the near-term upside for a non-yielding metal, but any data that pulls the first cut closer is going to get silver and gold's attention in a hurry.